welcome back to Return on Podcast. We are knee deep in a mini series called Cash is King. I'm Tyler again with Seller Accountant, and just a quick reminder that Seller Accountant is the sponsor of this content. I'm grateful for my team and the work that they do for scaling 6, 7, and 8-figure sellers. We provide, game-changing bookkeeping services that, get that headache off of your plate while getting due diligence proof investor grade financials to you each month. And then we provide, game changing, also next level CFO advisory services where some of the stuff that I'm going to talk about in these, sessions on cash flow, we can take that off your plate for you. So just a reminder kind of halfway through the series that, if any of this is really overwhelming, we'd love to help you if you need it. In the last episode of ROP, we talked about building a tactical weekly cash flow forecast. I don't know if you remember that. If you haven't listened to that one, go back one in the feed and listen to it. That weekly forecast is really only going to go 6 to 8 weeks into the future, and you got to edit it every single week in order for it to be helpful, right? This is going to make sure that you have money in the bank to pay the bills that are imminently due. Having that weekly rhythm is going to give you the peace of mind so that you can sleep at night, right? You don't have to worry about crashing the boat. But that weekly tactical cash flow isn't a great planning and strategic tool. The weekly picture is kind of like, if you think about it, like if we were captaining a ship, that weekly picture is like a depth finder to make sure we don't hit any icebergs that are running close to the ship. But that depth finder isn't a very helpful tool for helping us drive to the right destination. And so we need another cash flow planning tool that isn't, I'm not going to be able to see all the icebergs that are 1,000 miles away. I can only see the ones that are close to the boat, but I still need a navigation system that helps me get to the destination I want to get to that is 1,000 miles away. And so if we kind of translate that into e-commerce entrepreneur speak, we need to have that weekly tactical rhythm because I want to sleep at night. I don't want to be in the fetal position at 2:30 in the morning praying that I don't run out of cash when the next bill comes out. I don't want to do that. Life's too short. But then I need to take the next step in making a monthly forecast. Not going to be quite as accurate. It's a little bit more directionally, where do I want to head, and so that I can plan in advance. And so I want to give you 5 nuggets with the remainder of this episode that I think will help you build out and then hopefully kind of automate this monthly kind of pro forma. All right, nugget number 1. You got to gather your accrual P&L and balance sheet, right? Your financials for the last 24 months. Obviously, your books have to be pretty decent for this to be a helpful part of the exercise. But assuming you have solid accounting, grab the last 24 months, and I would probably just export that into an Excel or a Google Sheet, split by month so that you can see it. What's great about having your historical financials is that that's really where you get your powerful insights into what your seasonal trends are. Do we sell a lot more in fourth quarter during the Christmas rush, or are we selling, I have a client that sells beach umbrellas and they're really going to be hot going into the beginning of the summer. Understand the seasonality and the trends of not just your sales and profit, but I'll give you an example of this from one of our clients. So a lot of our clients have a big Q4. They kind of get organized in Q1. They pay their Uncle Sam bill to the IRS. And then they're sitting with some pretty significant cash right at the beginning of the summer. And it's really tempting for those sellers to just go, all right, now is the time to buy mama a house or to go ahead and buy that new car I wanted. But what they seem to always forget every year is, oh boy, I'm going to have to place that last PO and then fund that last inventory investment in about August. And I'm going to be running lean, baby, until that Q4 rush comes around again, kind of at the end of October, November, and then the first part of December. And so if we have a monthly cash flow plan, we can say, oh, wait a minute, hold on. I need to wait another couple of months before I buy that car or before I hire that employee because I'm going to need that cash. I'm going to need to keep some fuel in the tank so that I can weather the lean parts of the year. So grabbing that historical data gives you great insights into how cash has tended to be high and low in your business. All right, second nugget is now that you've kind of got a picture of the past, you got to put together your sales forecast. And this is something like I'm the CFO for a whole bunch of Amazon and other e-commerce brands. And this is something that's really hard to outsource. Like, I am pretty smart with the numbers. I have a lot of clients that we serve, but I don't know what new SKUs you're going to launch. I don't know what new variants are going to get traction. I don't really know what the trends are with your specific market and your customer like you do. I just don't. And so this is kind of the sales forecasting. What's the demand going to actually be is really one of those functions that's pretty challenging to outsource. So even if you do hire a team to do this for you, you're probably going to need to take a few minutes to think, okay, what are my sales going to be in the next 12 months, month by month? And you can do this in one of two ways. You can either get really, really granular and put together a spreadsheet with each of the SKUs that you sell, and then literally month by month try to come up with a demand. I'm going to launch a green one in March, and so I'm going to increase it by a little bit there, and then I'm going to expect to have some dips because of the seasonality. You can spend a ton of time on this, or if your portfolio and catalog are staying roughly the same, you can just use some simple year-over-year assumptions. Like, I'm going to grow 12%. So if last June was 100,000, I'm going to grow 12%. I'm going to be 112,000 this June. One way or another, you need to build out something that you believe could be realistic in terms of your growth on the sales front. That's the second nugget, is just build out your next 12 months sales forecast. And now for nugget number 3, use those historical financials, that profit and loss statement, and even the balance sheets so that you can understand the flow of your inventory over time to now flesh out that next 12 months. Okay, you've just built your sales forecast. Now I need to go back to each of those, say, columns for a month, right? And I need to say, okay, what are my cost of goods sold, or my advertising, or my personnel expenses, or my rent likely to be in those future months based on the history? Now, I want to caution you here. At Seller Accountant, we are a big fan of accrual accounting, right? Where we want to book those cost of goods sold in the month where we actually ship the product. But when it comes to building your future cash flow forecast, we've got to flip the script a little bit. We have to actually think about what month we're going to have to stroke the check or send the wire to fund the inventory. And again, you're going to know this probably better than even your accountant does, to say, okay, wait a minute, when I order a 20-foot container of X product, I'm going to have to pay a deposit a few months before I'm going to sell it. And then I wouldn't try to get too detailed with this, but try to understand, roughly speaking, if I'm going to sell $100,000 worth of product in November, when am I roughly going to be paying for that $100,000 worth of product? Probably in like September, right? So pick the time and just make sure that you put those inventory expenses in particular in the month where you're likely to have to park the cash. It's not going to be perfect, but I think it's going to help us unearth when we may have some months in the future where we're in trouble, and it gives us the power to kind of be proactive, right? So that was the third nugget, is just to use those historical data points to flesh things out. By the way, don't forget to add tax payments to this. I've had a lot of clients that were like, ooh, we have this really sexy looking future cash flow forecast, only to get it blown up a few months in where we forgot we had to stroke a $55,000 check to the IRS. It's, if you're doing things well in your business, you're going to make a profit, you're going to have to pay some taxes. That's a good thing. We just got to plan for them. Okay, so that was nugget number 3. Number 4 is, once you've built this kind of version 1.0 of the model, you're going to have to stress test that model. And I want you to stress test it in 2 different ways. One is, let's have the kind of BS filter. Is this a realistic model? I can't tell you how many times this is me. I'm not making fun of anyone else. This is me making fun of myself. I can't tell you how many times that I've built a model of a business going forward for myself, and every month in the future is rainbows and unicorns, and I couldn't possibly screw it up, and I can't believe how much money I make in the future. But when I look at the historical data, everything's like kind of flat, or I made money but not much, or it was even some negative months. And I just want to encourage you, if you ever look at a trend line and all of the historical data is like meh or like average, and then all of the future data is, man, we're going to be rich, baby. Just use the stress test to say, hold on, that might not be a reasonable, realistic forecast. Let me go back in and sober things a little bit so that the forecast is meaningful, right? And so the second way that I want you to stress test it is, based on what I just said, I want to grow by whatever, 15% or 20%. That means I'm going to have to pay for that inventory a few months before I can sell it. Am I going to run out of cash? What months am I going to be feeling kind of tight when I look at this forecast that I'm kind of building in a spreadsheet? And let's plan in advance. Man, if I'm going to run out of cash in November, and right now is August, or right now is July, that gives me a lot of power because I can go start negotiating with my bankers now. I can go start working for ways to restructure things now instead of waiting until it's part of my weekly digest and I'm like, oh gosh, I'm in trouble, right? We really want to use this monthly forecast to predict the icebergs far enough out that we don't end up hitting them and don't end up having to panic with them. So that's the stress test. That was nugget number 4. The last nugget is once you've kind of figured out the logic, I want to encourage you to explore bringing on a tool that might help you automate some elements of this. So at Seller Account, we've been doing this for a long time, and all of our cash flow plans, even a couple years ago, were all on Google Sheets. It was the only way that we could understand it and really build out the logic. But as we've gotten a little bit better at this, we've realized that there's a tool called Fathom that you can integrate with QuickBooks Online. And there's a tool called LivePlan, and we're playing with both of them. We're leaning more towards Fathom, and that's what we're using for our current CFO clients. But you don't have to hire. I mean, listen, we'd love for you to hire us. We can do this for you. But if you've got time, you don't necessarily have to hire an accounting firm to do this for you. You can just do it yourself, right? And so and the reason I say that it needs to be in this order, by the way, is if you try to dive directly into a tool before you've kind of had to skin your knees and figure it out in a spreadsheet, you're likely to not understand the algorithm that the tool is using. And that for me, that's been really frustrating in the past. So we have always had to understand the logic within a spreadsheet or Google Sheet, in particular is what we normally use. And then once we figure out the logic for a particular kind of business model, then let's deploy technology to make it easier to maintain the forecast so that we don't do the thing that happens with a lot of business owners where we'll make the forecast and then forget about it all year, right? So I just want to encourage you to do a couple of things, make this forecast, but then actually take a look at it each month. So those are the 5 nuggets I would give you that I think can help you not just have that weekly depth finder to avoid the pitfalls and running out of cash that could happen next week, but I want to have you think into the future at least 12 months. For us, actually, we tend to do 12 to 18 months, but pick a number of months into the future. Make some simple assumptions about your demand, right? The amount of sales you're going to have. Use that great historical data from your profit and loss and P&L to build out what that is going to mean for you on a cash flow standpoint. Don't forget about taxes. And then stress test it to make sure that that model is sound. And once you figure it out and know it's sound, let's try to find a tool that can help us automate or make it more simple. So hope this was helpful. Again, this is something Seller Accountant can do for you if you get into trouble. But I just encourage you, if you've got a little time, geek out on the spreadsheets and see if you can figure out how to deploy these 5 nuggets. And just remember, don't let cash happen to you, but plan cash because cash is king. I'm Tyler, again, from Seller Accountant and from Return On Podcast. Thanks for listening to this episode. Hope you have a fantastic week. We'll see you next time. Take care.